All right. Hello, everybody. Welcome back to another episode of Chip Chat. This is episode number 9. Jose, we're basically 4 months into doing this, dude.
That's crazy. It's definitely been pretty fun, and I hope the viewers are learning a lot from us. So I'm enjoying it, and hopefully we can do this for a lot longer.
Yeah, we started, I think, end of January or like early January. And so it's fun to keep this thing going. Thank you, everybody, for being here. Again, if you have any questions, leave them in the chat, and we will get to all of them at the end of the pod. A lot of stuff to discuss this week because earnings season has begun. We had 2 major companies that reported earnings already, TSMC and ASML. So we'll be discussing that, some implications of those earnings and what they said. And then also AMD had an announcement 2 days ago around some new chips that I thought were really interesting, and we'll get into that. So I think let's start off the show with ASML. So ASML had earnings. ASML, I'm going to let Jose explain a little bit more about what ASML does, but they provide the servicing for the machines that end up producing a lot of these chips. So it's not really like a chips play, but it's definitely a vital part of the chips ecosystem. Their earnings were not the best. Their orders are down 60% quarter on quarter. They did 5.9 billion in Q4 in orders. Or like bookings. This quarter, they did 700 million. So again, they make the equipment needed to service advanced chips. The CEO said that they're still going to have a good year. 2024 is a little bit of a recovery year when it comes to demand. It'll increase in 2025, and they're not downgrading their expectations at the end of the day for 2024 full year revenues. It's just this quarter wasn't the best. And that is why the stock is down about 5-6% from Tuesday. Jose, what is ASML for those that don't really know what ASML is? And then what did you think about their earnings as well?
Yeah, so ASML, for those that are not familiar, is a manufacturer of a very special type of equipment needed to manufacture the overall chips. So they only have probably like a handful of customers like TSMC. We know TSMC manufactures the chips, but the way they manufacture the chips is thanks to the equipment that ASML provides. So ASML provides this kind of lithography machine. They have 2, which is direct ultraviolet DUV and extreme ultraviolet. Extreme ultraviolet, it's what's used to kind of build the most advanced chips, like your 7 nanometer, your 5 nanometers. Most of all these AI chips is most of the chips that go into your phones. And in that market, they have pretty much a monopoly. There's no one out there that creates this type of equipment to this type of level. So they're pretty much in a monopoly. In forms of their earnings, I mean, I don't the stock obviously the market didn't like it, right? We saw the stock, I think yesterday drop like 7-8%, and pretty much the semiconductor space was also red with it. I don't necessarily think it's bad news for the overall semiconductor space. I think maybe investors were just expecting too much from ASML. And let me explain why. So right now we are in this recovery phase in the semiconductor market. 2021, 2022, and maybe even 2022 and 2023, we saw kind of this huge over inventory correction. So when you're seeing a huge over inventory correction, semiconductor companies don't go and purchase too many chips from TSMC. So TSMC's kind of manufacturing line goes down and down and down, and the utilization rate continues to decrease. So now we're kind of in that recovery phase where now we're seeing an uptrend in PC sales. We might see an uptrend in other markets. So now the utilization rate is starting to go back up, but it's still not at full capacity, right? When you recover, you don't go back from 0 to 100% in a quarter. So what's happening with these big players like TSMC is they're still trying to go back to kind of full utilization capacity. So there's no real reason for them to purchase equipment this quarter, especially if they can purchase it next quarter. And ASML mentioned that they said, hey, look, some quarters are a little bit lumpy. Last quarter, we got a lot of great numbers. This quarter was pretty weak. But if you add them together, it's pretty much on average of what we normally get. And it's just the lumpiness of when orders close. So I don't think it was necessarily bad for the overall semiconductor space. But I think a lot of people were just worried that, hey, look, ASML, chip company, bad earnings means bad things for the overall semiconductor space.
Yeah, that's a lot of the sentiment I got on Monday when this news came out. Because I think I woke up at like 4 a.m. and the earnings were already out because these guys are in the Netherlands. And I was like, oh, everything's going to suck today. But NVIDIA was green. So like it was kind of, the market was smart enough to at least realize like, yeah, it's not the best, but it's definitely more company specific than it is a chip or GPU kind of demand shortage problem. TSM, we'll talk about them in a second. They said they had some more supply issues versus demand issues as well. Now, one thing on ASML, how important are they? Like, can someone copy these guys?
For their EUV, no. I don't think no one. I don't think there's anyone that can copy them right now, and they're super important because if we want to get to smaller chips, and we need to get to smaller chips one way or another, for power efficiency, for improved performance, especially if right we're saying that a lot of the workloads right now are still somewhat of computational power limited.
Hmm.
So one way to increase computation is either through there's various ways. One of the ways could be by decreasing the sizes of chips and having more chips in theory inside of a semiconductor product. So they're very important for the development of next generation of chips. And there's no real competitor, in my opinion. But I do want to say to TSMC, that's just such an important part of the semiconductor space that it pretty much just moves with the semiconductor market. So I personally don't own ASML because I don't believe it will ever kind of completely outperform the semiconductor space. Instead of owning ASML, I personally prefer owning a semiconductor ETF because I'm pretty sure they're gonna mirror each other most of the time.
Okay, so you think it's an important part of the ecosystem, but it's not like the thing that's moving with SMH or NVIDIA or AMD.
Yeah, I mean, it's because it's such an important part of the segment that it moves the entire segment. So if it moves the
Right.
entire segment, it moves in the same kind of percentage wise. I don't think there's ever going to be a huge divergence in results of ASML versus kind of a semiconductor ETF.
Got it. Okay, cool. So that's the update on ASML. Let's move on to TSM that had earnings today. Really interesting numbers by these guys. The stock is down, and I think the stock is down because it was up 40% year to date. So, I mean, they would have to just have insane numbers to get more of a premium, but I don't expect the sell off to be anything more fundamental. Revenue is up 16.5% year over year. Incredible. This is a company doing 18 billion in revenue and or 18.8 billion, and net income, so profits, are up 9% year over year, which again is just not easy to do at a company at their scale. The TSM CEO said on AI demand, the demand is very high, extremely high, and we'll do our best to increase our capacity to alleviate the shortage. Probably not enough this year, but for next year, we'll try very hard, indicating there is more of a supply issue than a demand issue. What were your thoughts on the earnings? Do you think they crushed on their numbers, and any insights to take away from them?
Yeah, so TSMC really good for the AI space. So right off the bat, like you mentioned, the CEO did say, "Hey, look, a supply constraint is here." And let me just remind maybe some of the investors: the supply chain is not necessarily because of the chip manufacturing; it's because of a special advanced packaging that is needed to create some of these chips. So there's a process within the manufacturing that's very supply constrained at the moment, and that's what's causing the bottleneck. That's obviously good for AI companies because it means that they're going to have more demand than supply. So we're probably going to continue to see high margins in companies like NVIDIA. If we continue to see sales of AMD's, if we see sales of AMD's MI300X, their AI GPU, they're probably also going to be able to fight a little bit on maybe pricing power just because of the supply constraint space. Now, TSMC, unlike ASML, I do believe TSMC is a better indicator of what's happening in the semiconductor space. And I was actually just working on a video for them, and they mentioned a few things I wanted to share the viewers here that I was gonna get on my video later on. So
So
let
we
me
get
kind
we
of
get the exclusive before the video.
exclusive here. Yeah. So let me share screen. Let me go to my Windows here. So two things, and it has to do more with the overall market. So let me just make this a little bit better. Oops. So this quarter, they mentioned that they lowered their forecast for 2024 for the overall semiconductor space. They mentioned that this they expect 2024 to be a recovery in the semiconductor space and to grow roughly 10% year over year. This was a little bit different where last quarter they mentioned it was expected to grow by more than 10% year over year. So they're seeing a little bit of weakness in certain markets. And luckily, there was a Q&A session where someone asked, "Hey, CEO of TSMC, where are you seeing the weakness in the semiconductor space, and where are you seeing the strength?" And the CEO mentions that right now, one of the few markets that they're seeing a little bit of weakness, nothing too crazy, is the smartphone. So the smartphone is recovering, but not as fast as they anticipated.
And that makes
Another
sense
one.
because Apple's numbers were down year over year, right, for the iPhone?
Yep. And then the second market that they see kind of a very similar thing is the PC space. They mentioned that, hey, look, the PC has bottom, but the recovery is starting to the recovery is a little bit slower than anticipated. Luckily for them, the AI and related data center demand is very, very strong, and that's helping them grow. And later on, I think there was analysts who wanted to go a little bit more in depth on what market really saw the biggest weakness. And the one market that they saw the biggest weakness, they projected that one of the platforms, the automotive platform, will increase this year. But now they're actually expecting it to decrease. So this was their biggest change in kind of compared to 3 months ago. So it does seem like the automotive market has changed dramatically in the past 3 months. That this market originally from TSMC, where they are usually very conservative, they thought it was going to increase 3 months ago. Now, 3 months later, they're saying they're expecting this to decrease. So
They're
something
expecting
to
autos to decrease the need for chips. Is that what you're saying?
Yes, automotive. So what they're most likely saying is inventory correction is still going to be very, very strong in the automotive space. So these automotive companies are either going to slow down production of cars, so they're not going to need as many chips as they previously anticipated. So pretty
Mm.
much how we saw that over inventory correction in computers, where there were too many computers in the market. Computer companies did not make computers for some time, so we saw a decline there. Now the automotive market, there's too much inventory out there, so we're going to see probably car companies slow down purchasing or manufacturing of cars. So they're going to see this demand of chips for automotive decrease a little bit.
Now, the demand for chips for automotive, that is that only EVs or that's in general cars?
I think I majority of cars. So it's for the whole market. I think if you look at an EV car to a combustion engine car, um, EV cars tend to have more chips, but I would say that right now, because this is still an ICE market in forms of vehicles, right? They're probably the huge market share leader here. Most of it is going to come from those types of industries, but it does imply that there's going to be a weakness in the whole automotive segment. So includes EV and ICE.
Okay, so if they're automotive, if they're seeing there's so much or too much supply right now, too many inventories when it comes to the automotive sector, is that bad for TSM? That or they have too much back orders when it comes to automotive that they don't need to worry in other sectors that are fulfilling the demand for their chips?
So for them, they're most likely not going to get any revenue from here. The other thing is automotive is a very, very small portion of this company's total revenue. Their two biggest player for them is the data center PC market and the phone industry. Those are pretty much a majority of this company's total revenue. The automotive segment is very, very small. So I don't think it's necessarily bad for TSMC. And they mentioned right now we're seeing huge growth in the AI market. But it does kind of showcase that, hey, look, there's going to be some weakness in the automotive space at least for a few more quarters. Because remember, car companies order the chips, and the chips take some time to manufacture. So it's not like this is a chip that's going to go into a car next week. These are
Right.
chips that were going to go into a car probably in the next few months.
Yeah.
Because right, it takes some time for the chips to end up making it to that manufacturing place. So it kind of gives us a little bit of a headway that, hey, look, maybe this car weakness might continue for a few more quarters from here.
Why do you think it's selling off? Do you think it was just priced too attractively?
Mm, I I
Like
don't.
there was no numbers you saw that you thought deserved to sell off, right?
Yeah, no, I don't think so. I just think, like you mentioned at the beginning, TSMC definitely saw a nice price action. This whole year, I think it's up a nice amount year to date, and it's up a nice amount in the overall past 52 weeks. So I think it just might be the overall correction and all the other things happening in the semiconductor space right now. But in forms of TSMC's number, nothing that would tell me, hey, this was a bad quarter for them.
Okay, now I think that can get us into a little bit of a conversation around um, Tesla, because if the argument from TSM is that the automotive inventories are too high, that would speak to the broader EV problem we're seeing in the context of demand. And as of the past basically 2 months, we've been seeing that EV demand is starting to fall off a cliff compared to where it
Mhm.
was back in 2021. In Europe today, Tesla came out and they said they had 30% less registrations month over month. It's the lowest they had in 16 months in the EU. And in general, in the EU, they only had 134,000 cars in March that registered as EVs. Does TSM's earnings around and what they said about the automotive sector have any implication broadly for EV demand and for Tesla?
I think so. I think it would just, as a Tesla investor, it just tells me, hey, look, Tesla stock, I don't think in forms of their car business is going to showcase anything good for at least the next few quarters. Not just this quarter, I think for at least the next few quarters. So that's what it tells me, and it kind of prepares me as a shareholder that, hey, look, I do not expect any good signs for at least the next few quarters for Tesla.
Yeah, I would tend to agree. I mean, we can see right here, TSM here at 131. That's down 5 right here, 150.45. Do you like under 150, or do you think this is a falling knife and you're going to stay away for a little bit?
No, I mean, I don't. I dollar cost average whenever I get money into Tesla. Has been one of those few stocks that I've been buying recently. Um, so I think you've mentioned it in your Twitter that you would consider this an accumulation year for Tesla, and that's how I pretty much see it. This is not a stock I believe can give me any form of great returns in the next 12 months, but that's okay. Um, because the technology that I'm looking for, I think it's going to take a little bit longer. Obviously, we can kind of see some pretty cool stuff with like the robo taxi, with Optimus continue to evolve. We're seeing Tesla obviously focus a lot in the AI space, or announcing a little bit more, being more public about it. So there's some cool stuff incoming, but I don't think it's going to be anything meaningful in the next 12 months in forms of revenue or something like that.
Yeah, I think the problem with Tesla here is that there's only negative catalysts coming up, and it's like it's weird for me because I think the stock has, I don't want to say bottomed, but it's down 40% year to date. You would imagine that, all right, that's a decent place to at least think that there is a DCA opportunity. It's a bottom. But the negative catalysts that are existing, and we just talked about for those that are just joining, TSM's demand in the automotive sector, their signaling is going down. That's similar to the data we got from Europe today around EVs. So if EV demand itself is slowing down, Tesla is going to have to make a tremendous pivot to be able to get investors to care. What do you feel as a Tesla investor about the, I would imagine, complete 360 Elon's done when it comes to, or complete 180 when it comes to the robotaxi? So potentially pursuing the robotaxi over the M2, do you think that makes more sense given you care more about AI than I would imagine a $25,000 car?
So the way I see it is, I originally saw the M2 platform, or this kind of cheap platform, to be one meant for increasing the amount of cars out there for Tesla.
Right.
And the reason they wanted to do that, in my mind, I could be completely wrong, was to increase the data so they can increase their AI solutions. So I think it was going to be, obviously, the car, the lower you get in the car, probably, even though Tesla is great with manufacturing, they're able to kind of be in margins compared to other players. The lower the car, the probably weaker the margins is going to be. So for them not chasing maybe the Model 2 or the M2, it kind of tells me that, hey, look, right now, what their original purpose of the M2 was to help collect a vast amount of data, it tells me it doesn't need that data anymore. It's probably doing so well with their current platforms that it makes more sense to focus in the next phase of technology evolutions, which is the AI space. So, I mean, obviously, if they do the robo taxi, right? I've heard you talk about it with other Tesla investors, that this is just the same platform as the M2. So, if they're making one or the other, Tesla's known for being better in the manufacturing line than other players, so they'll most likely also focus on bringing that vehicle to the public. But it just tells me that, hey, look, in forms of data, Tesla believes that they have great amount of data right now, that they don't really need to pursue a cheaper vehicle right now.
And I think that makes sense. I've been talking to a lot of people about this, like from a regular Tesla bull perspective, someone who looks at the company in a much more sophisticated way than just an automotive company. If they have a data advantage, a competitive data moat, and the more vehicles they get out there, we're seeing FSD cross 1 billion miles, probably going to cross 2 billion in the next few months. Then that's something they should capitalize on, because that's very high margin and it's something that's proprietary to them. But as Dan Ives, that quote I just showed, he's incredibly bearish if they go straight to robotaxis. His argument is that you can't just go from M2, or you can't skip the M2, which is what's going to increase free cash flow,
Mhm.
margins, volumes, and deliveries, or at least that was the expectation Wall Street had over the past few years. If you just get rid of that and go straight to autonomy, even if it's kind of the same thing, but like the focus is the robotaxi versus like an actual $25,000 competitor to a Honda Civic, then Dan thinks the stock's falling off the cliff because there's not enough fundamentals in the actual numbers over the next 2 years of earnings, because it's going to take some time for robotaxis to really become real. to support the company. And so I think that's the scary part
Yep.
right now.
Definitely. And I would say one of the big changes that's happened is kind of this trajectory of EV growth this year. So, what's the point of them focusing a lot of money and investments on building a product that's less margin, and now with the overall EV market being weaker, so they're going to even have to do more pricing fight compared to other players. So instead of focusing and burning cash flow on that, why don't they just and again, I could be completely wrong. We might hear they am too, but if they're just focusing on the robo taxi, maybe not hurt their margins as much with the robo taxis, maybe continue to grab more data, showcase that product. And once that kind of growth comes back to the EV market, and not just the EV market, right, the automotive market in general, then they're like, hey, look, we've already built this product. We already know how to build it. Now we can throw a nice amount of money and ramp up production a lot faster because now we have the incentive to grow our free cash flow, to grow our revenue from that segment. So that's, again, it's definitely a very evolving time in the automotive space with all the macroeconomics happening right now.
Do you have any doubt on your Tesla investment long term, given some of the pain we're seeing, given Elon's erratic kind of pivot to robotaxi, or do you think the float is still the ship is still afloat?
Not because of Elon. I just think the AI space evolves pretty quickly. So what we think is super important right now, maybe with the evolution of technology in just next year or 2 years, can shift that mode. So I think it's not on leadership itself. I think leadership is seeing a lot of the changes right now, and they're kind of moving with it. I think it's just more the unknown of how technology might change within the next 2 years. I think that to me is probably more the biggest risk outside of what anything Elon might say or might get anybody angry about.
Yeah, I agree. I think it would be kind of crazy if the stock were to tumble below $100, like that January 2023 price, because the market's doing well. So this would be a Tesla specific issue. And which brings up another interesting topic. Elon, if the stock gets to $100 by June, something else is happening in June, which is a shareholder vote on Elon's new compensation. Elon's asking for $47 billion, down from $59 billion. If the stock is worth $100, that'll be a $325 billion market cap, which means over the past 5 years, from 2018, when the compensation plan was created, Elon would have 6x'd the company, which is different from the 11 to 12x that he did before when he was perceived to be getting a crazy compensation package. That means that 47 billion would be 14% of the market cap if Tesla was $100 in June. So here's the question. A, right now at this market cap, would you vote for Elon to get that compensation? B, if Tesla falls under the 30% to $100, would you vote for him to get that compensation deal?
I mean, I don't, that vote was already made and agreed on many years ago, right? So I would I think it would be crazy for one, obviously understandable, right, but to vote against it right now. But I think if investors were willing, price changed with the overall market. We still have seen this evolution of technology from Tesla. I wasn't a Tesla shareholder when the original vote was in, but if I mean, I don't think my vote is going to make any meaningful difference. But I personally would vote yes, though.
Yeah,
Oh,
I
you're
would.
muted.
Yeah, I would vote yes as well. But those who wouldn't vote yes, very interesting human beings. I just don't know how you deny him, everything that he's worked for. But I think he's going to win it. It's just going to be an interesting kind of play in terms of how that vote ends up turning out. Guys, we got one more topic left. Anyone have any comments? You can leave them in the chat, and we'll get to all those questions at the end or any comments. I want to bring this up to you, Jose. This was really interesting to me. We got a new video from Boston Dynamics. We've been talking about robotics for a long time and the intersection of robotics with semiconductors and AI on this podcast. Let's take a look at this video because it's one of those videos that we haven't seen, or it's a robotics video I don't think we've all seen in a while. Now that's from a company that has kind of been under the radar. And when I mean under the radar, I don't mean people don't know their name, but they haven't really made big waves when it comes to robots. They've been working on them for 2 decades, but they never like really revealed a commercial product that could successfully go to market. Shem Pasta here says Boston Dynamics robot seems aggressive and not nice. Given humanoid robotics are becoming bigger now, what did you think about that video?
I mean, it is showcasing, because we're seeing a lot of startup companies showcase some pretty cool humanoid robots. We just heard from NVIDIA's GTC event that humanoid robots is probably going to be, or in robotics, autonomous robotics in general, is going to be one of the biggest markets in the AI space within the next few years. So it tells me that Elon better show something good in the upcoming. Whenever they show anything about Optimus Prime, it has to be good, because right now we're definitely seeing the competition heat up, and the way technology is evolving, there's going to be a lot of competitors in this space.
Okay, so having said that, and it's growing so much, speaking of NVIDIA and their robotics division, Dr. Jim Fan, who's one of the senior researchers at NVIDIA, he tweeted, humanoid robots will exceed the supply of iPhones in the next decade, gradually, then suddenly. So that's talking about 2040 or 2034. Elon responds, yes.
Mhm.
Do you think that statement is possible? That humanoid robots can be more than iPhones in the next decade?
I think so. I mean, it depends all on the pricing. Um, but if there's a robot out there that can cook for me and I can enjoy more free time, at the end of the day, everything that technology does is to increase your time, right? So I feel like, for example, the internet, right? The internet makes sure that you don't have to go and read an encyclopedia or try to find the answer. You used to probably spend hours trying to find the answer to a question. Now you can do it in a few seconds, or just Google it, or Bing it if you use that. If I think robots is going to be the same thing. It's going to help us get our time back. And if it becomes at a price that most families can do, I do believe it's gonna be what Jim mentions, and very similar to the phones, right? Originally, cell phones were pretty expensive. Only like the top dogs used to have it, so that's why it starts off gradually, just like any technology. I mean, with the EV vehicle, the first few, the Roadster, right, that Tesla had was mainly for just the big players, and eventually we kind of saw it here into your more typical consumer. And I think that's what we're going to see with robotics. It's eventually going to start off at probably some crazy price point, 100,000, maybe more, and everybody's going to see, look, it's not going to happen. It's not going to happen. But within 5 years, technology evolves so quickly, prices continue to adjust down, that who knows, maybe 15,000. I wouldn't mind paying 15,000 for a robot that would cook, clean, and do all this stuff for me, and I can just enjoy my life and not have to do some of those tasks, mow the lawns, get my time back. And I definitely would pay for that, and I can see that growing dramatically.
Yeah, and I think the thing here is if we pay for little products and services around our house that make our life easier, like I know, as an example, people pay for like a stand that has multiple USB ports so they can charge multiple things, right? Like that's a silly example, but we all are willing to pay for very small things that give us convenience. If you could pay for something in bulk that could really give you convenience in your life, like as you said, free up your time, that would be pretty dramatic. And I think the interesting thing from an investing perspective is if we could just step outside the box and just imagine that it does become bigger than the iPhone, what companies are building it? Because it's not Apple, it's not Google. There's going to be different companies here. There's going to be Nvidia, Figure, Aptronic, Tesla, etc. And those are the companies that maybe it's worth a certain percentage of the portfolio just off that thesis. Because if it does not replace the iPhone, but replace the iPhone, and you have no exposure, might not be the best situation in that place.
I mean, I always like to think things and imagine the craziest thing. I could imagine, right, a Tesla car, self-driving, with a fleet of robots coming to you and like mow your lawn or do
Right.
something, right? Hey,
Right.
instead of purchasing the whole robot itself, just get it for a few hours to come do some chores, and then go on to the next house or whatever to do whatever else needs to be done. So you don't have to even pay for the full robot. You just pay for its the time usage.
I agree. Doom Charlotte. Oh, that's true. You license it's almost like you're paying an employee. Imagine if the robot just took 100% care of the house, mowed the lawn, extended your driveway, walked the dog. Yeah, it should theoretically open up more revenue, operating, more top line revenue and operating income margins for companies if robots are able to do these things more effective than employees. And for human beings, we should become more productive. Like for example, if you've always wanted to start a YouTube channel, but you have a 9 to 5, and then when you get back home, you're tired because you got to do a ton of shit right in the house. If the robot could do the stuff after your 9 to 5 that you would be doing, and then you could focus on your YouTube channel, you could grow a business, right? Or not a YouTube channel, an e-commerce brand, whatever it may be. And human beings have that have the ability to become more entrepreneurial because they have their time freed up, as you said. That could open up parts of the economy that we're not thinking about, even if a lot of people are laid off. And so it's going to be really interesting to see how that plays out over the next decade.
Definitely, definitely.
Crowd control says small talk with my wife.
Oh man.
Oh boy, dude, that's there's a lot of use cases. All right, we'll get into Q&A, guys. Now, any questions you can put in the chat, and we'll keep going from there. Thank you everybody for being here. Jose's YouTube and Twitter in the chat, and it's in the description as well, so I'm putting it here. Question here from Captain J. Edwards says, what can these humanoid robots really do to integrate our lives efficiently? We're 10 to 20 years away from that. Robotaxis are the next closest big leap to an advancement. So I'll reframe the question. Do you think robotaxis come first or humanoid robots come first? It's a good question.
Yeah. I think robo taxis, just because while there's a lot of unknowns in the road, it's a lot of unknowns you can kind of think of, where in a house you're gonna have, there's so many objects here and there. So and I think there's probably a lot more safety issues of a robot being around your house, about being around your baby, around your dog, around your wife. So I think robo taxis are gonna beat humanoid robots to market.
Okay, but do you think they beat humanoid robots in the warehousing and enterprise space, or do you think robotaxis beat them in the consumer use case?
Not okay. So in the consumer usage, yes, robotaxis. In the in the kind of manufacturing world, I think humanoid robots, because there's a lot of within there. You don't have that many unknowns. You know, hey, box, other robot doing this, and the unknowns there are somewhat known, so it makes it a little bit easier to get into there. So I think in the manufacturing world and kind of the business world, you might see humanoid robots there first.
Yeah, I agree. I think in manufacturing, robots will, I think in like the next year and a half, I mean, we're already seeing a bunch of partnerships with robots in different factories, but at scale, I think it does happen sooner than robotaxis. Do you think the regulatory problem around robotaxis is a legitimate concern, or it's just like a fake bear concern that the bears have?
Sorry, I missed that question. I was reading some of the comments.
Do you think the regulatory problem with robotaxis is a legitimate concern, or do you think if FSD becomes safe enough that regulators will allow it because they're not going to be that scared of
it? That's what I think. It's the biggest thing with FSD in general. It's just it's going in a completely different direction than most other car companies of the use of LiDAR and other types of systems out there. And obviously, at the end of the day, unfortunate to say, a lot of these government officials get paid off by a lot of big car companies. So I think even if FSD is great, the biggest battle is going to be the regulatory issues.
Yeah, I agree. And if they can get it to be perfect, maybe it makes it a little easier. But if these politicians don't want to lose campaign donations from GM, Ford, Stellantis, etc.
And I think the way it becomes easier for regulatories to pass through is by showcasing FSD more often.
Yes.
Because then you're going to have those people that didn't know about it say, hey, look, it's actually not that bad. My government official or my official should vote for this FSD, this vision system to be okay because I trust it. So they should trust it too. But I think right now it's such an unknown for the consumer market that it's a lot easier for kind of your officials to kind of, oh, right now it's not good enough, so we shouldn't really push it out there.
Right. Leandro says Chipchat is cogent, timely, and rare. Thank you, Leandro, for being here. AMD predictions for Q1. So we know they reduced the guidance from Q4 to Q1, and that's why the stock kind of struggled a couple months ago. How do you think Q1 is going to go for AMD in the next couple weeks?
So Q1 from TSMC, we just heard that the computer market is not growing as fast as it was intended. So in their client market, I believe we might see maybe some weakness or not as much growth as expected. Luckily for AMD, the only one that really matters is going to be the AI space. So the two scenarios are going to happen. Either Lisa Su comes out and, well, three scenarios. Lisa Su can come out and say, hey, look, my estimates of last quarter of 3.5 billion was still conservative. Let's increase it some more. I think that would be very bullish, and it is definitely possible. The other two is just staying flat or decreasing. I don't think they're gonna stay. I don't think they're gonna decrease. I think there's the probability of Lisa not giving an update and just continuing at 3.5 billion. I think even if it stays at 3.5, maybe Wall Street might not like it, because I was just reading some analyst updates, and a lot of them are expecting about 5 billion this year in the MI300X, when Lisa Su has only given 3.5. So I think we have to see an update to see a nice price action from here.
Now the stock fell from 225 to I think around 150 right now. Still is upgraded from I think Piper Sandler is one of these firms to 225. Do you think the 200s is fair value, or do you think it's better that it fell back down to here to 150?
I think it's better to fall back down here because we still don't know much about the MI300 demand. For example, the MI300, the only real cloud server provider that's going to use the MI300 right now that we know is Microsoft. We haven't heard anything from Google. We've actually seen a report that Google might not even use the MI300. Amazon is another one that's not using the MI300 or hasn't announced that they are. So I think if one of those other cloud server providers comes out and tells us, hey, look, we're going to use the MI300, that would be very, very bullish. But right now, not many, just Microsoft and Meta platforms, which are typically the ones that use their previous generations, are going to use this MI300X. So for me, I would want right now valuation, I think, is sitting great. I do believe there's huge growth opportunities for the MI300X, but there's still a lot of unknowns. So I prefer it at this 150 opposed to that 200 level.
Do you think they're going to give us clear indication around demand around MI300, or they're not going to be as explicit when it comes to understanding it?
I mean, I think Lisa Su knows that this is where, I mean, I've listened to a few, not conference, but investor conferences that AMD has been part of. And they keep mentioning that 2024 for the MI300 is more just going to be a foundation year for them. 2025 is where they expect to see a lot of that growth. So I'm personally not expecting too much from them this year, but I hope Lisa does give us a nice update on the MI300X. And I think she has to, because that's what the market really wants to hear about right now. We don't really care much about the PC space too much. The embedded market that they deal with, we know is pretty much weak right now. So that one's expected to see a huge decline. So the only one that's really going to be driving growth for AMD is the AI market right now.
All right. 185 people. Thank you for being here. We got one more question left. Jose, let's test your memory here. Let's see how old you're getting. Do you remember the last question that I asked on the last pod we did last week, where we ended the pod? Your eyes got, you're like, what the fuck is it? Do you remember the last question I asked you last Thursday?
Last Thursday,
we were on this pod. I was like, Jose, what? I'll give you a hint. I was like, you got to pick one.
Oh, yes. I mean, I think now at these prices, I would back then, last week, I think I was a little bit in the fence of 50-50 each. I think now if I really had to pick one, I think AMD is definitely sitting at some great price points.
Okay, the reason I asked is because Dylan here, there's the last question, says, can Intel fall off the edge after earnings versus their low expectations for Q1 being obvious and maybe priced in at this time? I'll go first. I think I'll go out on a limb. I don't think Intel's falling after earnings, dude. It's down 15%. I think this thing has gotten pretty hammered, and for good reason. Now it's down another 2% today. Goodness gracious. But I do think if they put up the same 12 to 13 billion that they said they were going to put up and don't surprise investors, this thing should be flat, if not bounce a little higher. Do you think there's more downside for this one after earnings?
The only way there would be more downside is, like we heard from TSMC, the computer market is slowing down. I want to know if when they gave that guidance last quarter, even though I think they decreased their guidance last quarter as well, if they decreased it enough. If TSMC just told us that, hey, like the computer market is still weak, Intel is the biggest market shareholder of the computer market right now. So if that's true, Intel can definitely see some weakness there. The other thing is, I think the foundry business, many investors want this to succeed right away. But the foundry business is going to take like 2 to 3 years. So I think if one was an Intel shareholder, this year and maybe next year will be a year of accumulation. I don't really see much growth.
It's the politically correct way of saying you're fucked for this year. That's what it is.
It's like, yeah, unless unless their AI accelerator that they did announce, I think we talked about it last year, their Gaudi 3, if they give us some numbers on that. But usually they don't share too much numbers on the Gaudi platform individually. But if they do come out with saying, "Hey, look, Gaudi 3 is going crazy. We're going to be sold out. We have a lot of capacity," that could be the only way, in my opinion, we see a nice rally on Intel.
Yeah, I'm getting interested in Intel not only because we talk about it every week, but I want to sell puts on this thing. And I want to save stock that I can sell puts on that has some capital appreciation baked in. I think Intel at 34 is a deal. But
Mm-hmm.
if this foundry business does not really meet the expectations, if the Gaudi, which the market laughed at when they announced in the context of being better than NVIDIA, does not get any love, and overall they don't really show that much earnings growth, then it's a scary one to sell puts on because the premiums might be nice, but it might be a really classic value trap. So it's going to be interesting to see their earnings as well.
Yeah. Yeah, I think their foundry business is going to do good. I really do believe that they're going to have a lot of support from governments. They're moving in the right direction in technology there. So I think they're going to do really well with the foundry. Unfortunately, the foundry is a very, very, very slow play.
Yeah.
So that's why I believe the accumulation is going to be here, at least for this year.
Okay. Sounds good. Thank you, everybody, for being here. 191 people. Really appreciate it. Jose's YouTube and Twitter is in the chat. We'll be back next Thursday. Do we have any other big earnings next week in the semis?
Let me see. Let me just take a quick look. I know we're starting. Let's see.
I think we have. I don't think we have AMD and NVIDIA for a while, so that's going to take some time. Intel might be next week.
Let me get my calendar. I'll let you know in a few seconds.
Oh, AMD is April 29th. Okay, so we have.
Yeah. I mean, next week we actually have Intel. Intel is April 25th, Thursday.
Oh, perfect. Okay. So that's well, that'll be after the podcast, but okay.
Yeah. So if anything, either we can do a pre-earnings look or we can even just wait it out and do a live show. I don't know. We can talk about it later. But Intel is probably the most important. There's another one. Texas Instrument is doing Tuesday. I don't think too many people follow Texas, but if anything, during the next pod, I'll just bring a quick update on it.
Yeah, you should brief us on that because the only reason I know about Texas Instruments is because they made my calculator 10 years ago.
Oh, yes.
So that's like the only reason I know these guys. But outside of that, we'll talk about it. All right, good stuff. Thank you, everybody. Have a great day. I'll see you guys for the market close at 3:45, and we'll keep going from there. Thanks, Jose. Bye, everyone.
Thank you. Bye.